Well, thanks for joining us, and happy Valentine's Day to you and yours. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, we did not have any overnight export sales to talk about here this morning. I want to bring in Brian Hoops. He is with Midwest Market Solutions. He's based in Springfield, Missouri, and chat with him about the setup for today's market activity. Well, Brian, a little bit of pressure in the overnight grain trade. Tammy alluded to that a little bit ago, and we can revisit the prices here. A lot of stuff going on over the weekend, a lot of tension, of course, around Ukraine and Russia and that sort of thing. But this morning, as I was coming into work, there was talk that maybe things are simmering down a little bit in that regard. And it looks like commodities have backed off a little bit now. You can maybe explain if there's more to it than that, but let's look at our current prices. March corn currently down 4 3/4 cents. We're now at 6.46 1/4 per bushel. And December new crop corn was quoted 4 1/2 cents lower this morning at 5.90 1/4. Well, let's take a look at our soybean trade overnight. Our quotes are provided by bar chart. A lot of pressure here. We had the March contract actually down by 18 1/2 cents. It was priced at 15.64 1/2. July was down 16 1/4 overnight. Looks like the new crop November contract was actually down 9 at 14.35 per bushel. Well, let's move on and take a look at the wheat market. A lot of interest in that one here, especially with the Ukrainian situation. And we have March Chicago wheat 11 1/4 lower at 7.86 1/2. I did see a story here just a little bit ago that so far all the ports are remaining active in the Black Sea. Nothing has shut down yet, but it has maybe slowed a little bit with some Russian naval operation games, I guess you could say, or practice going on out there last week. Now let's take a look at the Kansas City market. It was down by 8 1/2 cents at 8.15 3/4. In Minneapolis, you had the March contract down just 1.5 pennies at 9.60 per bushel. Brian, the pressure in the grain markets overnight, is there more to it than just the Ukrainian situation?
Yeah, good morning, Marlon. Ukraine situation is certainly a big one that's taking place. Friday around midday into the closing bell, some news wire reports that the U.S. officials believed that Russia would invade the Ukraine, and that sent corn and wheat and crude oil prices sharply higher and spilled over into soybeans. Now, I guess I didn't believe that the Ukraine is going to tell or Russia would tell anyone when they're going to invade the Ukraine. And some of the tensions seemingly have backed off just a little bit overnight. They're resuming talks again, according to some of the newswire reports. So I think the tensions are still there. And there's still conflict, but it's just not quite as heightened as what it was perceived to be on Friday. And certainly, if they do invade, it would be very bullish for wheat and corn and crude oil prices. So those are markets you really have to be careful of if you're holding large short positions in. But, this is a weather market, so we've added some rain to the forecast for South America in the longer-term time frame, 11 to 15-day time frame, and that's enough to really pull these markets back. And soybeans now testing good support overnight after giving back some early session gains.
So you mentioned the chart pattern here on the soybeans. How much room do they have to run, though, if they do need to make a correction?
Yeah, they could really fall back here. After big gains over the last several weeks. They have a lot of premium pumped into the prices. So last week our support is about where we closed overnight in that May contract around 15.63, which is pretty much similar to where the March is trading at as well. So that's a good support area, and if we break through that, you've got another 20-30 cents before you find major chart support once again.
Okay, we'll come back in a moment and we'll pick up where we left off. We'll talk about livestock and the outside markets too, right after this. Well, we're talking with Brian Hoops of Midwest Market Solutions. And Brian, let's look at the outside markets here, see if there's anything that can be picked up from that. Any outside influence here. March Dow Jones Industrial Average Futures are down 21 points is all, 34,606. However, it is off of its overnight low by, almost 400 points. So it does have that going on here right now. On the dollar value, just so you know, March futures on the dollar index are 162 points higher. We're at 96.235. And we also wanted to check the West Texas Intermediate crude oil market. The March contract down 70 cents now at 92.40 per barrel after a high last night of 94.94. Well, when we went home for the weekend on the livestock trade, we actually had the live cattle market on the April contract, that is, down 70 cents at 146.17. So a little pressure on the live cattle. And on the feeder cattle trade, we ended up Friday with April down $1.05 at 170.70. Now, it had kind of a weird deal last week where feeders were doing the same thing the grains were doing for a couple of days there, and that was kind of odd. Lean hogs finished the week with the nearby February up 32, but the April contract was down $1.20. All the deferred contracts were over $1 weaker as we headed into the weekend. They had a lousy couple of days on Thursday and Friday in that April lean hog trade after making new contract highs. Brian, they just kind of skidded across the finish line on Friday afternoon. That was not a technically good close on a weekly chart.
No, they had a poor close Thursday, and then Friday followed it up with another poor close. So we had back-to-back poor technical days, and live cattle haven't done that much better than the hog market either. But as you said, contract highs, which are usually bullish, but a lot of profit taking, it seems like, coming off of those highs. We may have overdone it to the downside on Friday. Some of this pressure, I think, came from corn market starting to rally, and trade always trades fear before fact, and the fear is that corn prices would rise sharply, and I think they sold off some of the meat contracts in fear that high prices would lead to some lower prices of the livestock in hogs and cattle. Maybe some of the industry would not want to feed these animals out quite as long with the much higher prices of corn. But with corn backing off, we may see both the hogs and the cattle try and get a little bit of a bounce in early dealings today. The big cattle slaughter on Saturday, it pushed us up to about 659,000 head killed last week. That's a huge number and a really strong number, telling us that we are working through a lot of these cattle numbers that we're seeing. And right now we're seeing calls at steady to a couple dollars higher for the cash markets this week.
Really? Okay. Well, I wondered which direction they would go. We'll see when we find out. Probably won't see much for a day or two yet. Brian, thanks for the information this morning. And again, happy Monday to you. Have a good trading week out there. Brian Hoops with us with Midwest Market Solutions. Tammy, back to you.